Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, and I'm coming to you live from the Yahoo Finance headquarters here in the heart of New York City, a global hub where deals are made, fortunes are built, and the next market move is always just around the corner. Coming up, I'm going to share my thoughts on crypto, and I'm going to sit down with my good friend Cade Bergman, and we're going to share my Giambotta recipe. We'll get to that in a moment. So let's jump into my big take. Now, not long ago, the word cryptocurrency sounded like a niche experiment tucked away in the corners of the internet. Today, it is front and center in the conversations about money, markets, and even monetary policy. At the heart of it all is Bitcoin, the original digital asset born from a white paper in 2009, and now viewed by many as both a hedge against inflation and a disruptive force in global finance. Around it, an ecosystem of stablecoins, altcoins, and blockchain innovations has flourished, drawing attention not only from retail investors, but also from Wall Street, corporations, governments around the world. Now, we stand at a fascinating inflection point. Regulation is evolving rapidly. The U.S. has rolled out new stablecoin frameworks. The SEC is opening doors for cryptocurrency exchange-traded products, and policymakers are grappling with how to integrate digital assets into the broader financial system. Globally, approaches vary. Some jurisdictions are embracing crypto innovation, while others are pushing back with restrictions on mining or trading. At the same time, institutional demand and corporate treasuries are weaving Bitcoin into the mainstream conversation about risk, reserves, and long-term strategy. And the list of names entering the space keeps growing, from longtime players like MicroStrategy and BlackRock to newer entrants, including the Trump family, who recently made headlines by jumping into Bitcoin and crypto. And this ecosystem has become a magnet for capital, influence, and debate. The conversation now spans not only miners and technologists and policymakers, but also some of the most recognized names in finance, politics, and culture. The bottom line, crypto is no longer a sideshow. It's becoming a pillar of modern finance. Whether you believe it is the future of money or just a speculative asset, you cannot afford to ignore it. For investors, that means staying informed, understanding the risks, and recognizing that digital assets are shaping markets, policy, and portfolios in ways that will accelerate from here. Now, I'd love to introduce my next guest, and many of you may know him or heard of him. Cade Bergman. He's the co-owner and host of Wolf Bitcoin, who helps lead some of the largest Bitcoin and macroeconomic conversations on Twitter Spaces or X Spaces. He's also head of content at Wolf Financial, driving discussions of markets, Bitcoin, and policy. A committed Bitcoiner, Cade focuses on the Bitcoin ecosystem, from miners to corporate treasuries, while also keeping a close eye on how Wall Street views stablecoins and other cryptocurrencies. His perspective bridges traditional finance with the rapidly growing Bitcoin economy. Please, ladies and gentlemen, join me in welcoming Cade Bergman to the conversation. Cade, it is a pleasure to have you. Thank you for coming up. I know you live in Puerto Rico, a place that I'd love to go to, but thank you for coming up. And I have to tell you, it is very exciting for me to be having this conversation with you. I love what you're doing on Spaces. I love what you're doing with the conversation. I really want to get into it, but I want to give the audience 2 minutes. Give me just tell the audience who you are and kind of how this all happened to you.
Sure. Thank you. Well, thank you for having me on the show.
It's a pleasure.
Yeah, and shout out to Yahoo for giving us this amazing production. So Wolf Bitcoin kind of jumped onto the scene. Wolf Financial is actually a 4-year-old company at this point, a media company. The goal was to drive honest, raw conversations we weren't seeing on TV, and really getting nitty-gritty with the retail crowd. And that's what it was on X. And so we had retail people coming together on X Spaces, which are like radio shows, and people just come in, they call in, they can jump on stage and have these discussions back and forth. This platform grew to be something absolutely enormous, and incredible business were built from it.
And it is enormous, I have to say. It is enormous.
It is. And so many people have joined the conversation to the point where we noticed, and I've had the pleasure of being able to speak with people like Hester Pierce up in Washington, and I asked her, I'm like, hey, how do you stay up to date with what's going on the ground? And she says, oh, you guys do all the work for us. I listen to your podcasts. And I was like, oh my God, they're listening to all the shows. They're listening to the live conversations, because we'll have people on from these places. And so we have a really, really cool, unique spot. And so we've built this for the last 4 years. Wolf Bitcoin's about a year and a half old. I came on to build that, and that was basically what he did with Wolf Financial, growing this big brand for the stocks and for the traditional finance, now for the Bitcoin world. And so we built Wolf Crypto for about a year and then rebranded to Wolf Bitcoin when we realized there's a big difference here with Bitcoin and crypto. Such a big difference. It was almost we couldn't not rebrand. And so we had to split. We did Wolf Financial, and then we have Wolf Bitcoin, Wolf Cryptos. We have a few different aspects to the company now. So it's a big media conglomerate is what I would call it. And it's been a lot of fun building this out the last couple years.
So just to tell the audience, because I think it's very important, because you are a relatively young man. And you started in Bitcoin. How old were you?
It was about 4 years ago is when the whole journey started. Bitcoin really in the last 2 years-ish.
Okay, and you were how old?
27.
Okay, you were 27.
27 now.
You're 27 now,
yeah,
so you were 20.
Yeah, I was right out of college.
25.
Yeah, just getting out of college when I was getting into the investing world and really found a home in the crypto and Bitcoin world in the last few years.
And in that short period of time, you've just rocked it. I'm just so amazed as I sit back and I watch what you're doing. I think it's amazing. So you should just hear that right up front. I am just in awe of what you've done. So let's talk about this for a little bit, right? So you often say that you're a Bitcoiner first. So talk us through what that really means and how does a Bitcoin investor differ from, say, maybe a broader crypto investor?
Yeah, definitely. And then this is probably the part I was leaving out in the beginning, just to provide some context with the Wolf Financial, Wolf Bitcoin brand. And so now I'll kind of dive into a little bit more my philosophy with the investing.
Go right ahead.
And so because we have all these conversations. People come in, they want to buy treasuries, they want to buy Bitcoin miners, they have all these ideas what they want to buy. For me, I was more thinking, where are the wealthiest people? Where are they thinking about putting their money and how do they think about it? And I realized over time, the reason people were starting to dump enormous amounts of money into Bitcoin, but not Solana, maybe not Ethereum, this is about a year ago when I was finding these out, they were just picking Bitcoin. And I said, what is it about Bitcoin that you would take an enormous amount of your net worth? You've accumulated X amount of money over 75 years and you said, I'm going all in on Bitcoin. That sounds outrageous. There has to be something about this asset. And that's when I started doing the research and I realized that wealthy people, especially now with the inflation is coming in, there's all these numbers coming out, and people are even on TV are starting to be like, the economy is at all-time highs, but like how? And people are starting to just get a little bit nervous. There's all these different currencies coming out. We've got countries accumulating gold. And so people are saying, you put money into stuff that's not losing to inflation. Where are your options? And that's where the conversation around gold pops up. And Bitcoin is really starting to come up in that conversation. And for me, I had a choice. It was going to be, I'm putting my money in gold because I'm not going to put it all in stocks because that's dependent on the dollar. That would be foolish. You have to have some diversity. And that's when Bitcoin really started to enter that conversation for me.
Okay, so when you say you're a Bitcoiner first, you mean?
Bitcoiner first, I mean that Bitcoin is the apex asset. There is no better asset if you're looking about what's going to hold value over time. The only comparison is gold, and it's been around for a long time, but it's inflationary still.
Okay, so clear something up for me because I'm a different generation than you, so I'm just trying to wrap my head around this.
Sure.
So let's just talk real quick about there's Bitcoin, then there's Ethereum, which are two actually different things.
Definitely.
Right?
Definitely.
Ethereum is more like a foundation, am I right?
Yeah, I would say this. So Bitcoin's decentralized, dropped, it's proof of work, so you can't just print more of it. It's a lot of work to get more out there, and all of the stuff that was going to be about Bitcoin was put out there ahead of time, versus now we've got these other cryptos that saw Bitcoin and said, we can take that and build something around it.
Right. So, for instance, Solana, I mean, you can pick a whole bunch of them, right? All these different names. You know, some days they get hot, other days they run away and everyone's talking about it. The next day they crash. And so I don't really understand what all those coins do, and nor am I invested in it.
Yeah.
I'm invested in Bitcoin, I'm invested in Ethereum. Bitcoin's a bigger part of the portfolio, and it's not even that big yet, right? I'm just getting my toes wet. But should investors or should these people listening to our conversation be really playing in Solana and all those other coins, or should they be focused, like you say, on Bitcoin because that's where they're going to get the bang for their buck?
When I was about 24, I was trying to make a lot of money really fast. And so I jumped into DeFi, I jumped into Solana, I tried to trade. And that's great. I found that there are two swaths of people. There are traders, and there are people who know what they're doing. And then there's people who are kind of gambling and doing whatever random stuff. That's not the same thing. You have to decide if you're going to be a trader and play that game. If you're not, you got to be an investor.
Right.
And you got to decide what you're going to invest in. You got these things that are doing stuff, but they keep changing. We had Ethereum go from proof of work to proof of stake, which is an enormous change.
Which I don't, by the way, can you explain? I don't understand what that means, proof of work and proof of stake.
Yeah. So I'll keep it as high level as possible. Proof of work essentially makes it so that when a currency keeps getting rolled out, you have more Bitcoin coming into circulation, more Ethereum coming into circulation. Proof of work is created so that it's harder, takes longer, it's slower, and people made fun of it, and that's why Ethereum went to proof of stake, because how slow, what a dinosaur. But then after they moved to proof of stake, after about a year, people go, oh, wait a minute. that was on purpose. Satoshi Nakamoto had a plan that was actually part of the plan was that it rolls out slow so that it can maintain value over time.
Okay.
If you have more circulation coming in and coming in and coming in, like proof of stake, where it's a lot easier, there's not really rules. People can change. You can vote now because, I have proof of stake. I have more Ethereum than you. My decision it means a lot more. It's not exactly decentralized the way Bitcoin has these nodes, and it doesn't matter if you hold more. It's still decentralized enough. You still get 51% of all the nodes to agree on something. It's just not going to happen.
Right.
So that for me, that's the big difference, is that Bitcoin has something built into it that is special. Solana, Ethereum, these others might be cool. They might even be cool investments. They might, and Wall Street might even stick their toes in and do something cool. But there's something with Bitcoin that says this is a store of wealth that can put into a different category.
So then talk to me real quick about the Trump coin.
Yeah. Okay.
What is the Trump coin? It's just another coin.
Anyone could have made that one. Anyone could have made it. I could have made it.
Right.
And
is
called
there value in the Trump coin? Only besides the fact that it's Trump.
Sure. No. Besides that, there's none. And the problem is there's unlocks coming out every few months.
Right.
So all that's going to happen is it gets diluted. It's the best short opportunity of all time, probably.
Okay.
Now, it's a meme coin, so it could do whatever it wants. But in terms of actual intrinsic value, there's nothing there but the
There's
name.
nothing there. There is intrinsic value in Bitcoin.
Sure. Yeah, that's how I think about it. Well, you have to think about it. For some reason, at 2025, all the people who invested have valued in this Bitcoin at $120,000 for some reason. And every few years, more people find out about it, and it keeps rising. And so that typically, because you hear people say, "Oh, it's the dumber theory." You sell to someone who's dumber. With Bitcoin, I understand that, but I think, and this feels awkward saying on like a traditional finance show, I think it's because the currency was based in fiat before, and I think you can say that. With Bitcoin, it's just different. It's not someone dumber buying it, it's someone smarter. They're realizing there's something here. Yeah. They just found out about it later.
Well, but I think also now it's gaining clearly much more exposure, clarity. The SEC is now, fully involved in it, more regulation around it, which was, I think, part of the problem. People felt it wasn't really regulated, so they didn't feel safe in it. I think now they're feeling better about it.
Probably.
And I think more people now, certainly now because you can trade it in ETF and all that stuff, is that people are getting a little bit more comfortable with it. Doesn't necessarily mean it's not risky.
Sure.
It could be anything, right? Because we've seen how it trades. But my sense is, and this is just me, my sense is that as it becomes more mainstream, it'll become more stable.
Maybe. My only there's two swaths of conversation here, right? And because I have so many of these conversations, I get to balance both I think both can be true at the same time a lot of times with the macro conversation. But you've got the traditional finance folks who probably have been buying Bitcoin a lot longer than they've been letting on. But from where they're at as a public figure, they can't exactly say that.
Right.
So my fear is they've been buying a lot longer and they've known and they've understood. Yeah. Because what's weird is that all these people start to understand now because Wall Street threw more attention to it. Now you just understand it? It's like, is that really the case? Or can you trace back and look at history and say, oh, there's a ton of investors here from 2009, 2010, 2011, who we know today, who if I name dropped right here, you'd recognize their names, who are big time investors in Ethereum, in these ICOs. So they've known exactly what's going on in crypto for 10 years now. And so I just don't believe it. I don't buy it when people are like, oh, now we're all getting it. I'm like, no, people have gotten it for a long time, but now they're publicly saying it.
All right. So hold that thought for a moment. We're going to take a break and come right back.
Sounds good.
Okay, let's talk about Bitcoin proxies for a minute, right? So for investors who want exposure, maybe they don't want to hold Bitcoin. Maybe they just don't want to hold, but they want exposure to kind of crypto. How do they go about finding these proxies? Is it the miners? Is it the ETFs? Who else would it be?
Yeah, so it's going to depend on what kind of investor you are. I'd imagine there's a few different places you could go. There's IBIT, right, which a lot of people will probably go to. There's BlackRock. They hold the Bitcoin. You're not really getting Bitcoin, but you're getting access to Bitcoin exposure.
Right.
And that's the one caveat with every single one of these proxies is all of them are Bitcoin exposure. None of them are Bitcoin.
Right.
If at some point there's a bank run or there's some situation where everyone wants their Bitcoin out, there's no situation where they can distribute it because everyone is doing this. So if there's only 21 million of these Bitcoin, you got a question of either someone's lying or something's going on, but there's plenty of proxies. There's the Bitcoin miners, there's the treasuries, and
who are the Bitcoin miners?
Sure. So there's Mara, right? You've got Mara, which a lot of people recognize. You're gonna have Iron that a lot of people recognize. Clean Sparks. These are just bigger names, not affiliated or paid by any of these people.
Right.
These are just names that come up because I see them on the timeline. They're the ones that people recognize. The treasuries are like MicroStrategy, MetaPlanet from Japan, who just became literally like it was like 40 cents or something, and now it's at like $10. And it's a Japanese stock that just absolutely went crazy,
exploded.
So yeah, so the treasuries, their whole plan and it's so risky at this point just because where we're at in the markets with Bitcoin at 120,000, all of them buying into treasuries. They're at the simplest way to explain it. They just have Bitcoin exposure, and if you believe in Bitcoin as a long-term apex asset, then it's something you can get behind. If that's your if that's your position, though, I still think as an investor it makes more sense to hold Bitcoin. But I think if you're trying to get there and you're on the way, holding the treasuries and the miners, I think there's no problem. I don't know why there's so much hate around it.
No, I'm not sure. Well, I don't know. Maybe
in my world,
me. I'm not necessarily sure to say. But what are the things that I think is fascinating also about Bitcoin, and I would imagine a lot of young people know this. Maybe my generation doesn't. You can buy Bitcoin in fractional pieces. You can take $25 and go to Coinbase and buy $25 worth of Bitcoin. A lot of people thought I need $115,000 to buy Bitcoin. You don't.
Yeah.
You can buy every week, buy $50, $100, whatever you want.
Exactly.
Which allows people to get their feet wet, get in there and try to feel it and try to play with it, right? Look, you host one of the biggest, if not the biggest, Bitcoin and kind of macro conversations on X, right? On X Spaces. You do it. Is it daily? How often do you do it? Once a week?
We're doing the shows every day.
Every day.
Yeah.
And is it the same time every day?
Not the same. So we have different shows at different points in the day, but it's every single day there's some kind of show happening around market talk, Bitcoin, whatever's going on in the markets is every day. There's a daytime show and an afternoon show, typically 11 a.m. Eastern and 2 p.m., 3 p.m. Eastern.
Yeah, because it pops up on my feed. Yeah. I know when you're doing it because I get the notice, right? So it pops up on my feed. And the other day I clicked in because I wanted to see for myself. I was amazed at what I saw, who was in the room, the number of people in the room, and the conversation that was going on. In any event, what's one of this macro trends that you're watching now when you in this spaces, right? What are you hearing? What are people asking you about? What do you think is really going to move the needle?
Oh man, yeah.
Or what are people concerned about?
Yeah. Well, it's the same question in my head because Bitcoin is at 120 or around $110,000, whatever we're recording.
I think it's 113.
Somewhere in that range, right? Yeah. And so for the 4-year cycle crew, we're about at the end. This is about the top. If you're not in that crew, this is the beginning. So
if you think we're about the top, tell me what you think is going to happen.
Well, I don't even have to say anything because the 4-year cycle historical data is clear. If this is the top, we're going to cycle down for about a year, and then we'll be right back up, just like every other cycle.
Right, okay.
The other, and this...
So there'll be an opportunity, if that's true.
Yeah, there will be.
There'll be an opportunity for people to jump in at lower prices.
Yeah,
very much like the stock market, right? You see the cycle in the stock market, right? So,
well, I struggle because I love that idea. I'm so down for a bear market. I'd be so down.
Yeah.
The problem is, because I now understand the assets, so I'd be so down. The problem is all the treasuries are getting in right now. So my trend / nervous thing I'm also looking for in the future is that we've got the coolest thing ever, which is companies on Wall Street saying Bitcoin is an asset worth holding on our balance sheet. And we've even got Trump changing rules so that these kind of things can be counted towards as earnings, so you can be valued as more. So I'm glad that people see that Bitcoin is an asset worth holding. If Bitcoin can enter the category of gold, even if gold pulls back, people are still happy you hold gold because it's a treasury asset.
100%. And it's gold.
Yeah. And so my hope is that Bitcoin falls in that category.
Right.
The problem is all the treasuries got in at $120,000. So if we go down to 60K, they're down 50%. So my fear is that. My long-term thing is that no matter what happens in 10 years, we'll be laughing. But it might just be MSTR that's laughing because they're so far
But you
ahead.
really think the treasuries get in at 120? You think that's where they all get in?
Well, we've seen so many of them get in around, like in these prices, we've seen a lot of newer companies start to begin their exposure.
But you can tell when they're getting in.
They're getting in more now. Yeah. And even if they're dipping their toes in, it's not a problem. It's just their mindset. If they get in and they really understand the asset and they're cool with it dropping 50% because they're going to keep buying more, it's not a problem. It's just the people that bought in now and are going to get loud about the fact that Bitcoin was a scam and now they're down 50% more than they were already. And so I don't want them to think about it like that because it's not a question of Bitcoin. It's a question of like, hey, you're an investor. Look at your investments and what's a good choice.
Right. It's very interesting. It's very interesting. You know, I think for what I have, I think my average price is around $52,000.
All right.
So I'm up 100%.
There you go.
Right. So if we see it back off 30%, I don't really care. It'll give me an opportunity to buy more. Right. I mean, I continue even up here. I'll buy just less of it because it's at a higher price, right? But like anything, you want to see it come down because I'll take advantage and I'll end up buying more if it dips. Yeah, so I'm with you. I'm kind of hoping it dips because like everything, you never own enough, right? And so if it dips, you get a chance to buy more. Okay, so look, there's all this noise in the crypto space, right? Everything from meme coins to speculative tokens. And so how do people cut through that noise, right? What should they know? Speculative coins are just I don't play in the speculative coin market.
Yep.
And I would imagine that you would tell people, don't play in it. If you're going to be in this space, this is where you should be.
I think, and I keep saying this because I think it's important, and we have a few people on our shows who I really respect, and it's because they have an idea that they really believe in, and at certain points they press the gas and they go hard. There's a few people, Darkside's one of them, where he gets an idea he thinks is important at a certain period of time because we're in the market, and he really pushes the gas. So for me, we've got a lot of attention on Bitcoin. It's important to me that people really understand that there's a difference between Bitcoin and crypto. And the reason it's important is because the crypto folks, not all of them, but the crypto folks tend to fall on the swaths of I need to make money now.
Right.
The Bitcoin folks say, hey, I've got money. I'd like to not lose it. That's the two groups of people.
Yeah.
And so because this crew is more, the crypto crowd's more in the line of I want to make money today, this cycle.
It's more of a trade.
Right.
More of a trader mentality.
Right.
The other one's more of an investor
And so if you're
mentality.
in the crypto trading world, just understand if you're going to play with Trump coin, you need to learn how to trade and learn TA. Has nothing to do with Trump, or if you trade Melania token or Dogecoin, doesn't matter what the token is. If you don't know TA, you will get wrecked. And I know so many traders who absolutely cooked retail the last couple of years because they didn't know what they're doing, and they did.
Yeah.
And that's the problem.
No, and I agree. Look, maybe partly because I'm too old to play in that game either, but that doesn't make sense to me, and I don't understand it, so therefore I don't tread in it, right? But anyway, let's look ahead for a minute. What do you think is going to be the next big catalyst for maybe wider Bitcoin adoption? Is it regulation? Is it institutional demand? Is it retail demand? Is it technology upgrades? Or is it something potentially else? Something else?
I've got a couple things actually on this. I think what Wall Street will do is bring a lot of eyes, and they will make mistakes, and the mistakes will show the differences in the industry. So and by the way, I don't have a problem with Ethereum existing and these other cryptos existing because the ecosystems could create something. I don't know what their token's going to be about, but what happens with the tech could be cool. I have no idea.
Right.
What I see is, we've got companies in the Ethereum world, like Tom Lee's big on Ethereum. He believes that there's something there for Wall Street. So he's saying, hey, I'm buying a lot. So his company, like BMNR, is like up a bajillion. I don't even know what they're doing. There's a bunch of companies like that, right? And why the reason I bring it up is because we're going to see folks like Tom Lee, like Michael Saylor, like Brian Armstrong, right? These guys who are going to be public. They've got companies as well, and they've got tokens and ecosystems around them. They will make decisions and make policy and do things. They'll mess up and they'll have wins. From those wins and losses, we'll be able to pull things away. My big hope is that Bitcoin comes out as doesn't even need to come out as an asset, as like the apex asset. It just needs to come sideways. It needs to come sideways as, hey, the conversation about Bitcoin is this. The conversation around Ethereum and, like the BitMines, the FGNXs, the people stacking Ethereum, that's great, but you're in this category of stacking an asset for this reason. You stack Bitcoin because it's a treasury asset. The other ones, it might be for tech and it might be a tech investment, but there are different categories of investments, and I think it's important that people know that.
All right, so you're telling me I should sell my Ethereum and buy more Bitcoin?
I don't know.
I don't have enough of either that's going to make a difference, just so you know. Because, you never have enough,
Sure.
But it's interesting. Out of all of it, those are the two kind of where I'm dipping my toes, because I want to be a part of that conversation, but I also want to be part of that asset to participate.
Stablecoins can be the other place you dip. Stablecoins is the place where people essentially can get better yield than they've gotten at the banks. That's essentially the conversation with stablecoins, is that they're like, hey, there's a better system for money. It's better than fiat. And the government, low key, if they end up going to this treasury or to these the tether routes where they've got these stablecoins coming in, and people are saying, hey, instead of buying our treasuries, buy our stablecoin versions of the treasuries.
Right.
Then if they keep devaluing our real treasuries, I don't know how that plays out because I'm not old enough to be honest. But if the real treasury starts to get devalued and the debt that we owe continues to get devalued, if everything gets devalued in the dollar and the treasuries and the digital currencies and the Bitcoin keep growing, eventually it could be a situation where the government's like, hey, wait a minute, we could actually pay off this debt now. And I don't know.
I think it's a fascinating conversation, right? I think that's going to be the conversation for the next time, because we're running out of time.
Sure.
But I want to thank you for coming in and spending the time. It's been a pleasure, and I really look forward to doing this again, because I'm following you all the way. In the meantime, it's time to bring in the food. So I'm gonna give you Giambotta tonight. Now, Giambotta is something that my grandmother used to make, and that's what she called it. It's Italian soul food, right? At its finest. It's a rustic stew born from the garden, built on a simple rule of nothing wasted and everything used. You start with olive oil, garlic, and onions sizzling in a big, heavy pot. The smell filling the kitchen before the vegetables even hit the pan. Then you go into the staples, the eggplant, the zucchini, the potatoes, and the peppers, each one soaking up and adding to the flavor. Then next comes the tomatoes, ideally crushed, San Marzanos, with a splash of broth to bring it all together. You let it simmer on the stove until the vegetables melt into one another and becomes a stew that feels like it's been cooking all day. And if you have sausage or chicken nearby and you feel like you want to throw it in there, you brown it up and then toss it in and it becomes an even better dish. Every version is a little bit different because it depends on who's making it, what season you're in, and whatever it is you have in your refrigerator. Because the idea is never to waste the food. A ladle of Giambotta served over pasta or with a piece of crusty bread is even better, trust me. A drizzle of olive oil and fresh basil, and it is a humble food, but it makes you feel rich every time you eat it. Now, you can scan the QR code on the screen for the full recipe, and trust me, you can thank me later. That's a wrap for today's Trader Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcasts. And you've got questions or topics you want covered, you want Cade to come back, just email me at tradertalk@yahooinc.com because I'm always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. Take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.